Hello and welcome to this special report at XM.com. I'm Maria Pachardez, and joining me is investment analyst Marios Hadjikyriacos. We'll be discussing the current state of the U.S. stock market and the near-term risks. So, Marios, the U.S. stock market has staged an epic comeback. Can you explain why the market is flourishing despite the fact that the economy is not doing so well?
Hello, Maria. Well, funnily enough, we've had a correction over the past few days, but right now the stock market is back where it was in early August, so there's not a lot of damage done either. Now, what has been driving this market higher? The biggest factor have been central banks. So without going into too much details, when you cut interest rates to zero and you add so much liquidity into the system, you kill bonds as an asset class. Bonds right now do not provide any yield. Most of them are actually negative yielding. So your choices are, do you want to lose money guaranteed in bonds, or do you want to take some more risk and go into stocks where you might get a positive return over time? So that's a big one. The other one is how much the governments have done, and everyone has been spending like there's no tomorrow. And when massive central bank stimulus meets massive government speed stimulus, that's really rocket fuel for stocks. And I don't think this fiscal trend is going to go away either. Politicians have discovered they can spend money, and I don't think that's pretty popular with voters. I don't think that genie is going back into the bottle anytime soon. So we've had these massive forces that has been pushing valuations higher to the point where the US stock market relative to the size of the US economy is at the most expensive level ever. Price to earning ratios are near their dot-com bubble levels, and a lot of people are asking, is it a bubble? Maybe it is, but there are very good reasons for why we've gotten here.
So, if the stock market is in a bubble now, is there fear it will inflate further or pop soon? What are the near-term risks surrounding equity markets?
Well, there are a lot of them, and my base case scenario would be, some more correction as we approach the November election. Some air comes out of the bubble in a sense. It gets slightly deflated, but then I believe that the longer term outlook is very clear and it's higher. So let's talk about the election first. There are two main scenarios that could hurt the markets. The first one is a Democratic sweep. Biden becomes president, the Democrats take the Senate, they implement their entire agenda, and presumably that also includes higher corporate taxes. Now, I don't really believe that. The way US politics work, I don't believe any legislation that raises corporate taxes will ever get approved by Congress, but that's a different story. The other scenario is Biden winning the White House, but the Republicans keeping the Senate, and we have several years of political deadlock. Nothing passes and nothing gets done, much like Obama's second term. There are other risks: a second COVID wave, and Trump restarting the trade war with China if he wins. But I believe those are. The market is not going to focus on those right now. The big risk right now is the election and whether or not we get any more fiscal stimulus from Congress before the election. So yes, there are risks. I wouldn't be surprised to see a further correction lower perhaps, but the longer term outlook for investors who are willing to buy and hold for the long haul, I think that's very clear and it's higher. And I'll give you my most bullish scenario. The Fed recently told us whatever happens to the economy, even if it improves drastically, we still will not raise interest rates until 2024, maybe. Now, we might have a virus vaccine over the coming months, and we might have one distributed by this time next year. So if you have a vaccine and everything goes back to normal in 2021, but interest rates stay at zero for another 3 years or so, that's a jackpot. That's the best case scenario for stock markets. So I don't think the market is fully appreciating this still, and it might be a bubble, but that doesn't mean it can't be inflated further.
Marius, thanks so much. And thanks for joining us at XM.com.